Hi viewers, today I want to share details of an opportunity that exists in current Indian markets. This investment is intended for long-term investors ranging from 5 to 10, 15, 20 years. And also this investment should be only a small part of your overall investments. Let me start with the strategy. Pharma and IT are the two Indian sectors which got a big blow after US elections. If we think of investing in these two sectors now, IT is being a sensitive sector and going through many hurdles now. I'm planning to focus on pharma sector. Pharma is a defensive sector. Defensive sector means in any even in the worst economic conditions, people will use the products from these sectors like medicine, healthcare. No one can delay that delay these kind of services or products. So let me start with the funds available in India for this pharma sector. Reliance, SBI, UTI and Tata are providing pharma funds, mutual funds. This strategy is for long-term investment, as I said in the beginning of the session. SIP, we have to start SIP with half of the total money we have to invest per. We are planning now to invest per month. That means if you are planning 1000 or 2000 or 5000 per month, now start investing 2000 in these funds. If you are planning to invest 4000, you start with 2000. If there is any further downside in the pharma sector, then you increase the as systematic investment plan amount. And here when we come to analysis, let's start the analysis. Reliance Pharma Fund gave 14.73% returns and SBI Pharma 18.91, UTI 13.63. SBI gave more returns here, and standard deviation 16.18. That means 16.18% it might go up or go down when compared with the industry. And SBI Pharma 18.76%, it might go down or go up. It is the standard deviation. And UTI it is 16.7. And for Tata India Pharma Fund, we don't have the 3-year ratios as of now because the fund was incepted in 28/12/2015. And beta is the measure of risk for which Reliance Pharma is 0.9 and SBI is 1.03 and for UTI it is 0.97. And for alpha, which is a measure to understand whether the fund has outperformed the sectoral index or not, underlying. Reliance Alpha is 2.86, for SBI Pharma it is 5.67, which is higher, and for SBI Pharma beta is also higher, 1.07, 1.03, and for UTI it is 0.96 the alpha and 0.97 is beta. Your beta is little higher than alpha, 0.01%, that is negligible anyhow. Next, coming to Sharpe ratio, the Sharpe ratio actually it is a measure of returns with respect to risk of the fund. The higher the ratio, the higher the return it gave with the risk. For Reliance Pharma, Sharpe ratio is 0.62, for SBI it's 0.76 and for UTI it's 0.52. And upside and downside capture ratio, it is the ratio which tells us that if the market moves upwards, how many points it was moving, and when it comes downwards, how many points it was going down. The fund is going down when compared with the index. You can see here 91 and 75. If it goes up 91%, the fund is going up, 75% it is going down. And here 105 and 78.02, as it has more than one beta, it is obvious that it will cross 100. and for UTI it is 1.08. And coming to portfolio of these stocks, here you can see the portfolio for Reliance Pharma Fund and their respective P by P ratios. Here is another method I want to share with you. You can average the P when normally P will be compared with the sector, the peer companies. Here all are peers actually. These are peer funds we can say. Here average is 36.28 P by E average for the Reliance Pharma. Here it is 28 for UTI Pharma, and it is 30 for SBI Pharma, and for Tata India the average is 32.97. So UTI has more stocks and most normally not only we cannot see P ratio average for this mutual fund. This is just an as an example. I'm I just want to share with you. These are the total fund percentage. Remaining to make 100%, the amount will be liquid, that is cash and cash equivalents, or in debt. Here 8% is in debt nearly. Here also the same. Here and here it is almost fully invested in pharma stocks. If you want to invest in these funds at this time, uh, we can expect a decent returns over the long term horizon, as this is already in the defense sector. These funds are of defense sector funds, and I think it will give a good result in the long term. Thank you for watching this video.